Okay, hi there traders. So a little bit behind the 8 ball today. Don't know if it was just after the weekend or what it was, but yeah, a bit slow to get organised. Hope we're all doing well. Wait and see who's in. And we get up and running, so can you hear me okay? I'm wondering if it's the mic's not right. Hey Pete, can you hear me okay, mate? Just wondering, I've got the mic on instead of the headphones, so yeah, okay, thanks guys. Yeah, no, very difficult market, mate. I mean, I've been intraday trading a bit on the shares. So I've been trading today. I was going to trade Fortescue. I don't know if I did trade. I was sort of waiting for it. I thought a big gap down. I think it was XDiv pushed it down, went XDiv, and then it sort of bounced and went sideways and looked like it was going to roll again, but it just didn't. It didn't really set up, so I didn't trade that. But I was trading Zip. I didn't get caught by the strength, but I stuffed up because of I didn't expect that strength, and I was short, made a little bit of money, then went long and made about 5 or 6 cents when it rallied nearly $1. So it was just a stupid exit. But yeah, that strength sort of caught me off guard. I did not expect that after all this talk in the markets yet. Things are getting ramped up. They're ramped up. They're selling harder. They're ramping up harder. So it's just a very, choppy market, unknown market. Everyone's sort of expecting a sell-off, but days like this catches everyone off guard if you're going to sell, and then you chase your tail back up again. So we don't have a lot of. We actually only have 2 positions out of 10 that we ever do, and it's kind of hard. I mean, even though you're going to 2, the market's sort of ticking higher. It's hard to find something that looks good. To be quite honest, I looked at CBA, thought it was a short, and they're all financials are rallying today. They're finding some strength. Commodities, which everyone's talking about the next commodity boom, and everyone loves gold. Of course, gold's getting hit. Commodities, US dollar rallied, so they're getting hurt a bit today. Commodity stocks, so it's just a tough one to find something that's going to perform without, it's going to start to trend. Even news, some good results getting sold into straight off the bat. So don't think it's easy going out there, and you got to forgive yourself if you do make a few mistakes. I'm probably my hardest critic is myself, so. I guess a lot of people be the same sort of way. Anyway, I'll stop ranting and raving, but we've got... starters, welcome to Trade Setup in the live stream. Now, what is it? We've got Monday, the new start of the month. Sorry, the start of a new month. What am I talking about, the new start of a month? So it could have been a bit of play on Friday because of the end of the month, and then we'll see how we go. A bit of a bounce back today, whether that continues on. There's still a lot of issues in the US still, which could drag us lower easily. There could be a bit of a big sell-off, but this has happened so many times in the past. Big sell-off, everyone's positioning short, squeeze straight back out. You position short, you get squeezed straight back out. And what it also encourages people to hold your stocks. Don't fight the Fed type of thing. But we'll discuss that a bit more in depth with regards to bonds in a minute. Anyone that's new, welcome. If you do watch this later on, welcome. I hope you enjoy what you hear. If you do have any questions later on after watching it, just send me an email to support@tradesetup.com.au, and I'll get straight back to you with an opinion of what I think. So, yeah, any questions more than welcome. And like I said, it'd be great if you haven't subscribed to the YouTube channel, feel free to subscribe and leave us a like too if you enjoy any of our content. Help us keep pushing it out. So. Just the last thing we've got here is general advice warning. So it's only general advice that we give. I'm not taking into account anyone's personal circumstances. We are just, I'll just say it as I see it, I guess. We'll get rid of that now. So yeah, the market's up 104 points, so it's chugging away really nice. And I think that sort of strength, if everyone's had a bit of time to dwell on what happened Friday, the sell-off, dwell on it over the weekend. Even the US wasn't strong. The last 10 minutes got smashed in the US. The Dow dropped about 250 points. It was down 400, but it was only down, say, 200 or so coming into that close, the last 10 minutes of trade. So to me, that just I would have thought a bit of bargain hunting into the market intraday because it's been sold down and they're giving up the ghost at the last 5 or 10 minutes, or the algo's just chasing the market lower as well. So it wasn't the world's best close. We had a bit of on the fangs. They popped up a little bit. I think they weren't so bad considering what the Dow was the one that took a bit of a beating. So that was probably more the fact that everyone's just continuing along the same old path. A bit of a pullback on them. They're buying it up, so buy the dip mentality, which that's going to run out of steam sooner or later. Nothing keeps going up over and over again, and we've got now bonds starting to pressure interest rates. Now people will talk about, you say you can't fight the Fed, but the bond market can. I mean, if the US Federal Reserve, we'll get into a bit of depth on the bonds, I think, because people say the bond market is one thing, but the Fed is the one that, they set interest rates, which is fair enough. But like I was reading today, especially in the Aussie market too, the RBA can drop rates. Doesn't mean the banks have to. The banks can just stay where they are, and they haven't passed on rate cuts in the past too. So there's no reason why they can't lift interest rates if they feel like they want to. They're not beholden to what the RBA is doing. If the RBA cuts rates, you don't have to pass it on. When you're so low, the banks ain't going to go to zero. It doesn't matter what the RBA do; they can go to -10. The banks are not going to do that. It's just not in their. It's not in their best interest, not anyone's best interest, I don't think. So there's so much, there's little ammo left in the way of rate cuts. Now, the US, I think they just passed, the stimulus package, 1.9 trillion, and potentially more to come. Now and hopefully I think that's going to get through the Senate. They would expect it to, not get opposed. And then, there's more stimulus coming to the market, which means more US dollars, and that means more spending, things like that. So, it's just more flooding the market with the same old problem. Yeah, we've had the problem before, and that money was going to people who needed it to support the economy, support a meltdown. Now that we're coming out the other end, by the looks of it, with vaccines, pressuring markets back to the norm, more US dollars in the system. I don't know what they're going to support. There's going to be more money pushing into people's hands. Obviously, they've had a bit of a tough time. There's going to be a $1,400 stimulus check, I think, still. To me, that's just more money into the market, and you're looking towards inflation. So I think the Fed is just concerned with jobs. Now, there's probably going to be some jobs lost that will never come back. I think they've got to understand that. They can't keep pushing to full employment. And I think they're trying to bluff the market into saying, well, you can't beat us, we're the Fed Reserve. Yet you've got to remember, when the Fed buy bonds, and sellers, so they're buying the bond, if there's no one wanting to trade with them at the particular rates, because interest rates should be higher, if they feel that interest rates should be higher, they're not going to trade at them when the market's offering a crappy, the bonds, the US is trying to offer a crappy yield. Sorry for the language, but if they're going to offer, say, 0.5% when the futures market is everything saying 2%, they're just not going to trade with the Fed. So the spreads start kicking out on the physical bonds, meaning they can't support the market in that respect. You can't just say, the US, they just keep buying bonds, they keep supporting it, they keep quantitative easing, they buy the bond market, keep yields lower. But if no one's willing to trade with them on the other side at those yields, when they're looking at inflationary numbers are starting to tick up, jobless is starting to go okay. They had some good numbers out on Friday in the US. All these sorts of things point towards inflation. Now, maybe, obviously the bond market's probably got ahead of itself quite a bit, but I think longer term, the Fed knows they're probably backed into a bit of a corner where they're sort of committed to try to get back to full employment, yet they might have to admit they probably can't do that. And by saying, we're just going to keep buying, we're going to put a floor in the bonds, you can't particularly put a floor. I mean, it's like saying, not so much in a stock, but it's like selling a stock. Okay, I'm going to sell it here. I'm going to stop it from going up. No, so not stop it from going up. I'm trying to get my head around it. They're trying to stop it from moving in a certain direction, but if no one's willing to trade the other side, then they've got to come down. If you're antsy to sell something, we all know that, or you're antsy to buy something, if the market's ticking up higher and the spreads are going up, going out, you're not going to sit there. You have to start going to the market. So if they're forced to start offering higher yields to support that market, to support interest rates, to keep being the buyer, I don't understand how they can stop interest rates from going up, because they could be forced, like I said, backed into a bit of a corner. So I'm sort of trying to get my head around everything like that. I think there's still, it's obviously it's a serious problem at the moment with the Fed. They're not hitting their targets on inflation and everything, but the market could force their hand. And we all know what if the higher cost of debt, you can't assume that all these companies that have been loading up on low debt, low interest rate debts, with a really low cost, as they start to go high, they're going to have to finance that. They're not going to start, it's going to crimp on growth. So everyone's looking at that same sort of thing and going, well, we're already extended. What's going to happen if yields do go up, if it is inflationary and rates tend to go up? You got to remember too, if there's companies selling debt, and the Fed is saying we're only 0.5%, say, but they're going to sell debt to try to raise capital or whatever they do. They can't offer it at a very low rate because the Fed is telling them, well, that's where the interest rates are, because you've got to have buyers for that debt. You can't just expect everyone to go, well, I'm going to keep buying debt at really crappy yields, and I'm going to be the one that's going to cop it, because if that yield do go up, you're all of a sudden caught out. I mean, I read something about Aussie bonds. Not long ago, about a week ago, you bought Aussie bonds at 0.5%. Now your yields have gone to 2%, so you're actually losing on that bond. Okay, in the futures, in the secondary market, in the futures market, secondary market. Okay, so it's like, selling a stock and watching it keep going up. You could have waited a bit longer. It's that same sort of scenario, I think. So that's what the main focus is in the market at the moment. Maybe it's a bit of, buy the rumour, buy the fact with regards to stimulus as they push it through over the weekend. And everyone's just sort of, the trade has been more stimulus, weaker dollar, everything works out okay. But that also plays into more dollars in the system, plays into inflation. So, and higher inflation means a high dollar. So the dollars, and you've seen it. We've been talking about it for quite a while now. The dollar's been fighting between the bulls and bears. You're really having out. There's a lot of people saying more dollars, weaker dollar. So more US dollars in the system just means more supply. Demand's there. If demand stays the same, more supply pushes prices down. But then you got the inflationary effect, the safe haven effect, which could kick in. Safe haven effect means people push into the dollar, because you're looking at, we've said this in a stream a couple of times before, when you're looking at, let's just get it up. I'll get the dollar up here. That's the US dollar. So when you've got the yield plays, so if you're looking to trade, Aussie US, and you're flowing, this is large, not just myself. I'm got nowhere near it, but you're talking about large funds, flow of capital, where they're looking for yield. If they're potentially just looking still in the US stock market, then you've got that US dollar, the yield effect. I can't remember what it's called now. I always forget what the words are, but you're looking to buy one and sell the other currency. You're selling the lower yielding, and you're buying the currency that you expect to yield better, which is potentially the US dollar. If you're talking about inflation and higher yields, you're looking at yields going up in bonds, inflation going up, rates going up. That means you'll be looking to buy the US dollar and supporting it, because you're going to get a better bang for your buck than leaving it in Aussie dollar terms. And generally, when the markets do that, they send a flow into US dollars, and they start, it can ramp up their stock market, or people are chasing sort of, if you're going to sit there in US dollars, what are you going to do with it? You're probably going to buy stocks. Carry trade. Thanks, mate. I knew someone would come up with it sooner or later. So that carry trade could be one. Whether it is or isn't, I'm not sure, because it sort of means you flow into the US dollar as opposed to, say, Europe, or because they're coming out of the crisis. So the US is coming out of the crisis probably pretty well. Pound's appreciated, but it's been on the back of a weaker dollar now. If everything turns, all trades turn. We all know that. As traders, you know that nothing goes in one direction forever, and you're stupid to think that. So there is a short trade that's been on the US dollar for quite a while now. Let's just look at it. Oh, actually, not going to. On the daily. So that's, big sell-off from that 102, 103 down to 89. Now, this looks like it could go down. I'm sort of debating in my head. It is hard, and this is the biggest problem at the moment. If they just keep flooding the market with US dollars to stimulate it, then that should be good, you would probably think. It's going to cause some inflation, because that money is going to flow back in the stock market. It's going to flow. People are going to be buying things, TVs, all that sort of stuff. If you keep giving them checks, they keep buying stuff, causing inflation. So it's kind of it's a two-edged sword. It's hard. I mean, even by just looking at that daily chart in the US dollar, just by where I've got my lines drawn up, it doesn't mean that that's going to break that support zone because it's broken down here. Could just be sitting between 90 and 91, 92, and chopping around there. And that's what I think is happening at the moment. People are trying to decide what's going to happen with the US dollar, going down because of more stimulus or going up because of an inflationary effect and that sort of demand for the US dollar to support it, even if they keep flooding it. So I think at the moment, I think the gold is pointing to, it keeps getting sold off. It keeps getting hammered, and that's because the US dollar is popping up. Did trade up on, was it Friday night? Go back to the 30-minute chart. So now I'm sort of looking at this level, whether we are going to range trade between here, and it's going to be that sort of swing. Are we going to hold this level around 91 and start to reverse again and start to take out these lows and probably head down to 89, or is this a bit of a flush? And that's sort of the key point. Is this a bit of a flush? Which is what I've got my eye on at the moment. Bit of a flush, and we start to, obviously, with yields, maybe some yield heat coming out of the yield bond market in the way of yield, so yields trickling back up again. Yields trickling back down again, and bonds heading back up. Are we going to do that, or are we going to start to rally back up again and push through this level and start to hold a higher low? So yeah, it's tough going at the moment. The market's very much confused. It's still, we all know that if you're going to, also if bonds rally, yields rally and bonds fall, I keep getting those two, I've got to get it through my head. You've got to remember too, where they're going for yield. Now, we're all the same. If we look at some stock, I do this every day of the week. If you look at something, go, that's overbought, oversold, whatever it is. You're either oversold, you're looking for a buying opportunity. Overbought, you're looking for a selling opportunity. Now, if you're in the share market and everyone's loaded to the hilt, everyone's sort of looking at it going, well, you got to question when is too far too much. When is, these returns, when are they going to start to flatten out on the shares? When are they going to people going to start to take profit because they are overcooked? Is that because of the cheap debt that's been driving them higher? And if debt starts to get, having to finance debt, or cost of financing goes up, what's going to happen to shares? So if that's the case, you're sort of stewing all this up in your head. It's probably going to be a longer process, but all this is ticking over in your head. You've got to be looking at it going, well, maybe I'm going to take some heat, and that's probably what's happened in the last couple of days. I'm going to take a bit of risk off the table because I'm not going to always get back in, because if this market's going to keep going, I'll just keep going forever. But I would probably be happy to take some risk off the table. And then where would I put it? And now that bonds are coming back onto everyone's radar in the way of a return, if you're starting to look at it going, well, look, I could probably get some bonds and get some yield off those. So the bigger funds might be starting to edge out of one product into another, and you start to chip into the bond market for that yield, because it's just, the safety of the bonds. If there's going to be a bit of a sell-off, so I'm just getting stupid text through. If there is going to be a bit of a sell-off in shares, you want to start to take some risk off the table. And I'm talking the bigger flow of money, not just your mum and dad traders. They're normally the ones that are going to be holding on for the longest, chasing it. But if there's going to be something like that, and you are going to get yields continue to tick higher, I think there's going to be more and more pressure on the stock market. European yields are ticking up as well, and it's sort of like everyone's looking at it going, well, if everyone's back to work and we no one's really tightening the belt much anymore, and stimulus does, you do take your foot off the pedal with stimulus, because you can't keep throwing money at the US government. They probably can keep printing money, throwing it at the market, because their debt levels, as a country, they're going up and up and up. So sooner or later that's going to have to stop. And if the market's starting to get back to, they're looking to people get back to the norm, get back to work, economies start ticking along nicely, the recovery's on because of vaccines, then the US dollar, you'd think it's going to be a massive short squeeze, because that trade is already factoring in some, 1.9 trillion. I don't think the US dollar, I think we're pulling back at the moment. We've just sort of gapped down at the moment, but this could even shoot by the time you open in European session. Let's get that up, won't you? This year it's gapped down, so you could think, okay, we're coming off that high, but it doesn't matter. We could hold this higher low, another higher low here, chop around, and boom, straight back up. As the US opens, we've got maybe we're sort of trying to. I guess everyone's just trying to figure out more stimulus, less stimulus? What does that mean to the US dollar? To me, US dollar's starting to find a base. I think the longer this takes to turn and roll over again, if it's going to roll over, the more and more people on the short side are going to be thinking, why am I short? Should I readjust? Should I take some, like I said, risk off the table? Taking risk off the table means buying back into the market, buying US dollars. So you're selling euros, selling Aussies, selling pound, all that sort of stuff. So look, we'll see how it goes. I'm very tentative in the market at the moment, because I just think that we're getting to that and seeing the way the shares are acting as well. Intraday, there's some moves, but even intraday, like I said today, where are we? I'll get you a zip. Z. Whoop. This is what I was trading on Zip today. That's not 1 minute. There we go. So it's about here. I thought we were going to get a bit of a gap close. I was selling in here. I sold it off here, pulled it back, sold it again, and took some off just when we started to get a green candle. Then I was looking around here thinking, we're not really going to go down. We're actually looking quite strong. I didn't expect that sort of strength. I thought we might have. So it was here. I actually went long somewhere, actually just below here, around 10.55. 10.55, and I took it off probably just under 10 cents higher. And I didn't expect that just to power through to the highs. It's now up 6%, especially after what happened on Friday. So that's the sort of thing I think will catch people off guard, the kind of strength that's coming into the markets. Potentially that's because of that end of month. I'm not sure. I'm not sure how much of that, end of quarter is bigger. End of month, which is the end of March, will be the next end of quarter. End of month flows, there's a lot of mucking around in the markets. We know that. Maybe that was a bit of end of month flow on Friday when we got the big sell-off, and now we're starting to recalibrate a bit, pop back up. But for me, I'm not seeing a hell of a lot of reasoning to throw my money into the market at the moment. So we'll just tick over some of the main things, like that's the US dollar. We had a bit of chat about that and what I think. We've got some resistance up here. We might be backing off. I'm expecting that to gradually go higher, because I don't think the end of that yield play is off at all. I think there's more to come. Let's look at bonds. ZN, that's US bonds. I think that's the US 10-year, the T-note. So look at that. It's got belted. Just back to the daily now, but look at that daily. It's come back into this zone here. Yeah, you're going to get some sort of bounce, but if we get some more selling pressure and we're looking down to 128, yields are going to rocket. Okay, yields rocket. Our market is going to start, really going to sit up and take note. Not just our market, but global markets are going to sit up and take note. Okay, if we look at, I just want to go back to the weekly. So yeah, that move up there on bonds well and truly extended at 140. We've had a big sell-off when we're talking about that. This is a weekly chart now. Big sell-off. It is extended on the downside. So, what are we going to get now? A bounce after we broke this move up here. So there's a lot of people that have been long and long late. So when you're buying bonds, when yields are going down, obviously the bond price is going up. So if yields are going up, bonds are going lower. So whether or not selling back into the market and they're thinking about interest rates, that spread, like I said, the spread's going to widen if there's no liquidity on the buy side willing to step in at very, very high rates, near zero. Sorry, low interest rates near zero. Am I making sense? I keep getting my bonds confused, but let's go look at the currencies. One thing, keep an eye on. I'll go into a 30-minute chart. Is the yen, US yen. So that was chopping around. I actually thought that might have been a short the other day, and we didn't. We just powered higher, and that's when the US dollar was actually drifting lower. So when US yen, as a cross, is going higher, they're anticipating that US dollar is going to bounce, and it did. It rallied. It has rallied since then. So the US yen itself still looks quite positive. It's just that I'm looking at this. You've got this move up here. Now, if we clone that, you take that and expand. If I can get that, here we go. We expand that out. You can probably anticipate we're getting a bit heavy. You will start to get a bit heavy as this leg up's expanded quite well. the market's had a good run up here, pull back, good run up here, pull back, good run up. You know, are we getting to be extended? I think we are. It doesn't mean that we can't, you know, the US yen can't keep going high, but that's probably why you're seeing the US dollar starting to trickle lower. We might find that the US yen starts to hold some lower highs just to squeeze out some of this leg up here. We might get something like, you know, a bit of a pullback like that again. But it's all got to do with the US dollar. So if the US yen, the yen starts trickling lower, then expect a bit of a sell-off into the US dollar. But from there, you'd be looking to see what happens again. You know, what happens with yields, what happens with the US dollar. Yields start ticking up. You know, US dollar weakness won't stay for too long. It'll start rallying again and getting ahead of itself. That's yen, Aussie dollar. I'm watching these. This is let's go to a 4-hourly chart. You can see it a bit clearer, especially on the whole lot of them. So we had a really good run up. So that's since the Feb sell-off, Feb March. Those lows, you know, we touched it here at around 69.80. We keep drifting higher. This is back up to, I think it's the level prior to the sell-off. No, we've taken that out. So that's the level prior to the sell-off. It's, you know, really kicked on quite hard. What I'll be looking for here with the Aussie is that if we start to drift higher and we hold, and we start to, I don't really want to see, because there's a potential for a lower high, to really start to put the squeeze on some of these longs that are built up. And again, all this is going to work in to a stronger US dollar, I would feel. And yields, especially yields starting to tick up again in the US and in Europe as well. So if you keep an eye on a few different things, keep an eye on yield, keep an eye on US yen, and a few other bits and pieces. But I do think the Aussie's not, especially the way it broke down here and it's taken out the support zone. That was at 77.20. We're starting to look like we're showing a bit of a drift higher. Now, if we drift higher, I don't want to see action that's, you know, when it bounces, you want to see a good solid bounce. And then what I'll be looking for from now from a bull is these kind of action when it grinds back down and then you get bang, up we go. But when it starts to do the reverse, you know, we've mentioned this time and time again, if you start to grind up after a sell-off like that, and you do this kind of action, that to me is going to end up heavy. Okay, well, what I mean by that, you've had this run up here. We all know what's going on. Everyone's loaded long. If you're not long, you've got long. You've been long a lot of times. There's a lot of people that would be loaded long for a while, bigger funds, everything. Loaded into that Aussie dollar as a risk-on trade, and the way it's come off the last couple of sessions is a bit of a, you know, heads up that it is a concern. It is a major concern looking at yields. So if we start to grind up like that, it's showing me there's not a lot of confidence from the buy side this time around to push it up, and we could easily, you know, start to sink. And the fact that we just broken down and we sort of touched through this low, it brings into question this longer term uptrend. Okay, so that's what I'm watching at on the Aussie dollar. If I see something like this, yeah, we could get another sell off or a bigger sell off, and that could be the start of, you know, something a bit bigger. We'll have a look at euro. Euro's something similar. Euro's a bit more negative to me. Longer term trend, we can see this longer term trend is up. It's a daily trend. So that is, it kept touching, holding here, went up again. Potentially we're going to hold it through here, but this, to me, this big wash out of that level, and it's the inside level here. We flushed it out straight back down again. So, and that's after breaking. So they've got two key points here. You've got that flush down, and then we've just this flush down more recently. Yeah, we could retrace from here, but I'd be concerned if the euro starts to hold lower levels and we get that grind up again and we start to get a bit weighty, somewhere around 121.30 to 40. We start to get a bit weighty in there, you'd be concerned that that's going to have a bit of a sell-off, and this is a key lower high on the longer term daily time frame. This move up here, you know, a bit of a pop as the US dollar come back into support, and then bang, US dollar rallies, euro's down. So if the US dollar keeps rallying and yields continue to be a problem, there could be a bit of an unwind. There could be a bit of an unwind across the board. So that's what I'm watching. When it's easy to be long, everyone's long. There's no real risk to the market keep going up, doing its thing, but there is a massive risk to the downside if things unwind. So that's why I'm not getting negative as such. I'm just trying to analyze. Obviously, if you're loaded to the hilt on the long side in stocks, the only risk you ever have is a sell-off. Okay, so what could trigger a sell-off? Just say you're watching everything that's happening in the background, and obviously your shares are doing okay, but you've got to watch everything that's happening in the background to make sure that you're not going to get caught off guard and go, oh, this is just another pullback, another 5% down, oh, it's just another pullback. And then before long, you're down 20% on your share positions or your portfolio going, what happened? It's just taking into account that macro view and not getting caught. So continually assessing what's happening out there, where the market's going, the US dollar, all your other bits and pieces. So that's euro, pound, something similar, but the pound's looking a little bit better. We've had this run up here, it's extended, it just keeps rallying hard. It had a bit of a run up. We're looking at this as a key levels, that 143. It didn't quite get there before we had a sell-off. So again, like the euro, there's a bit of heat coming out of that market there on the pound. Gold, it's up $12 today, but that move down there doesn't look like a stop run to me as such. Stop run, but more sellers coming in. So if we sort of start to get heavy again, I'm looking more down to a move below 17 quite easily and back into this zone. So if you're bullish on gold, if you're bullish on gold, you're not buying it. If you're trading it, and this is what you see on Twitter time and time again, gold is this, gold is that, it's going to keep going up, but it's not. It's going down. At this stage, it's going down. So they've got it wrong. It's as simple as that. Yeah, longer term it could go up, but at this stage, it's going down and we don't know where it's going to yet because it hasn't pulled up. We haven't shown any signs that gold is going to find a base just yet. Yep, what we might do is just sort of grind in here. We go into that level and say, okay, and if you're the kind of trader that just sits on the bid and you go there, you put your bid in there, it comes and gets you on the way down, pops up a bit, makes a new lower high and bang, straight through and we're down to 1650 before you know it. That's not trading. What you're waiting for is to see some sort of capitulation, come into a level and then start to grind back up and hold a key higher level. Okay, something like this. If you can see that, then you can be a buyer into gold. And it just depends on what everything else is doing, of course. But at this stage, this is a 4-hourly chart, don't forget. This market, to me, is more, it's in sort of a corrective mode. This was the trend up. This is the corrective mode. Now, you don't know, I could say it's corrective, but I don't know if this is going to continue lower. It's going to turn into a sell-off, or it's actually going to be corrective when they start to get some buyers come in. Now, anyone that's been bullish on gold has probably tried it a few times, been caught out, or they're averaging down. Now, that's not trading. All that's going to do is blow up accounts. So you'll be very careful with what you're reading here because everyone's talking about an inflation hedge. We talk about inflation going up, and all gold done has gone down. So I don't know why it's going to be an inflation hedge just yet. Gold should go up in times of crisis. If people are getting fearful, it's not. The US dollar is getting bought up, bonds are getting bought, gold's going down with the US dollar going up. So yeah, there's not much working in its favour just at the moment. So you're better off if you're really bullish on it longer term, waiting till it gives you a setup and trying to get yourself into the right area. Another thing, talking about bubbles, Bitcoin. I'll get over it. Is it here? Oh, there we go. So this is the daily charts on Bitcoin. Depending, if you're looking at it and you just look at less data, it doesn't look so bad. But when you start scrunching it up or really winding it up, that does to me look like a definite bubble. And there's all kinds of talk saying it's a new this, it's a new that. I still don't see the use case for Bitcoin just yet until it's widely adopted. They could say it's the next form of payment, but that's not going to happen for a long, long time. If it's going to be, say, the next form of Bitcoin, I know you can probably buy things and sell things with Bitcoin, but that's nowhere near getting the backing of what it needs to justify to me anywhere near these prices. So to me, it's just a euphoria trade. Everyone wants a piece of it because you're reading the paper, they're talking to their, the taxi drivers, all that sort of good stuff. Thinking Bitcoin's the next big thing. Let's get a piece of the action, and of course, getting caught out when it has a bit of a pullback. And the more it goes up, the harder those pullbacks are going to be, and the more people are going to get cleaned up. Okay, so at this stage, we don't know whether this is just a stock standard pullback. It's not as controlled as it was before, and by controlled, I mean you can see that's sort of your run up there. We've had a move down, pop up, move down, pop up, move down, but all that took a bit of time. Okay, before we started to, and that pattern there we draw time and time again. This is the sort of thing we're looking at. That rally, pullback, high, low, off she goes, up and away. At the moment, that's just one big pullback. So there could be a chance that, if we start to do this kind of grind back up and people are going, the market's up again, I'm more inclined to think that's not. It's going to be a shoulder and we're going to get a bigger, deeper correction. because depending on where you sort of go, well, that's the trend up, that's the average, we're miles off that. We could be coming back to 33 before you know it, 34,000. The fact that we got everyone's sort of talking about up here, you got to remember, everyone's talking about it. It's in the news. It's everywhere. Everywhere you read, Bitcoin, buy. You either have or you haven't. You either have bought it or you're not going to bother buying it. I don't own it. I don't own Bitcoin. We traded it early on. I don't own it. I'm not anticipating I'm going to buy it at all. So what's that saying? And this is why we always talk about, if everyone's talking about it, you're better off selling if you're holding. And then if you haven't holding, don't get in because you're just looking for a pullback. Purely the fact is, there's only so much juice that can go into the market. And keep lifting prices, keep supporting it. And if everyone's talking about it, you're either, like I said, you've either bought it or you're not getting in. So what does that leave? A whole bunch of buyers in the market that are waiting for the next buy to come in and keep pushing up. And if there's no one coming in pushing it up, they're going to start to think about selling. It's as simple as that. That goes, that kind of theory is across the board in shares, FX, everything. Okay, so it's probably not so much in FX. FX markets move around with other things, but when you're talking about euphoria stocks, especially too, everyone, the same sort of thing. They've had a good run, but the harder higher they go, the harder and lower they fall. In my perspective, I think we've all heard of pump and dumps, and that's the sort of thing. You talk it up, everyone's yelling and screaming, we're going to the moon. Meanwhile, there'll be some cunning buggers in the background that have told you to buy it that'll be selling to you on the way up. But yeah, it's the same sort of theory. If everyone's talking about it, it's the next big thing. Once it becomes the next big thing, if you're not in early and you're selling to that euphoria, I would never be buying into that euphoria, because I think that's just it could pay off sometimes, but it's not going to be. It could be forming bad habits, and it's not going to be a winning strategy at all. I wouldn't think anyway. I mean, a lot of people probably would argue this market, the way it is lately, it has been a bit of a winning formula. It's stretched, let's buy some more, and it keeps getting more and more stretched, but they do come down, stocks. Whether you believe it or not, they do come down occasionally. So let's get into it. Put up anything that you want to take a bit of a look at, chuck it into the chat, and then we'll rip into it. I was just going to go over the lower time frame charts while I'm waiting for some stuff to go up. This is just still on Bitcoin. We'll just keep an eye on those. I know a lot of people probably like it, trading it. To me, it's still in a bit of a downtrend. I mean, it's not so bad actually. This big sell-off flushed a lot of people out, and we've got this bounce. Hold this inside level with a washout. It washes out, and you get the lower high back below. Actually, just look at that. We talk about this time and time again. Once you've got, so up until this stage here, you were looking at it going, okay, we've got a high up here, we're getting a lower high, and then we spike up. You spike up through that level. That's one thing to watch. Okay, we spiked up through. That's why I never buy above a key level. I want to see, especially, we're looking at a 30-minute chart. If I'm going to be trading a 30, I'm trading off of 5. So if you're trading off a 5-minute chart, you're just waiting for something to show you, it's going to retest and go. But if the market pulls back too far and back below the level too far, you get something like this. It comes back in the zone for too long. That's why I'm always drawing the differences by, if you go up through a level like that and we pause not far above it, to me it's a bit of a stop run. There's stops above there. And then if the next move is right down within the zone, I'm more inclined to think we're going to retest and then sell off. Because what that's done is you stop some traders out. It's also stopped some longs, some buyers above that level. They've got their buy on stop, stopped them in. They have to get out. It's swept out a lot of the other stops. Anyone that's been holding from the long side is starting to see this weakness trickle in, and then everyone's chasing their tail on the way out and selling back into the market. Now, if you ramp up through a level, let's make that better. If you ramp up through a level and you kick on quite hard, I would never go, well, it's gone through like a level you would expect. If that was, normally if it's a stop run, they don't go that hard through the level. They're quick to come straight back in below that zone. And it's the same on the downside. Take out support, they're quick to bounce straight back above support. Okay, and with resistance, they're quick to fall back below resistance. But if it goes a fair bit harder, then to me, there's a good chance that we're going to get maybe something like this. We're going to retest the zone, and then we're going to start to lift. And that's where you want to be looking for some sort of entry, whether it's off a high or low here, buy on the rise on your lower time frame charts. That's what I'm saying. If this was a 30-minute, and even if we got something like this, push through, get your retest, and go. That's the action we see on the 30. I'm looking for my 5. I might be looking for this kind of action on the 5-minute chart. Okay, just to get me going with the action rather than buying into weakness. I'm never a big believer on trading anything. I'm going to be buying into strength, selling into weakness, and that's for entering and exiting. So if I'm trying to, this kind of scenario, if I see this, I'm thinking there's going to be a sell here more than anything else, because it's come off a level, it's flushed it out. We've got to push back into the range, a retest from underneath. It's starting to fail. If buyers are strong, should go through, should not stop. It's as simple as that. Okay, so once you start getting that lower high come to play, that's the kind of thing I'll be looking for, a breakdown. You know that flush is dragging in some new buys and stopping people out, and where are they going to get stopped out? It might be enough of a bit of an oomph to get it to head down. You've got this double top, triple top up here, so there's a lot of reasoning why there was weakness there. So it's a prime entry short. Problem is it happened at 3:30 in the morning. So yeah, does that make sense? So at the moment, Bitcoin for me, we still got some lows in here. We're grinding down. We've had a good little retracement now. Are we retracing like we had before, and then we chop around, we hold an inside level here, and then find weakness again? I don't know just yet. But the fact is that, good run up, that was a heavy sell-off. The selling's running out of pressure. So there could be a decent bounce on the cards. We'll just have to wait and see. So maybe, if you just whack a line in, simple, whack a line in like that, you probably got, if it does start to drift high from here and retest up these highs, there's a good chance that you look for a high low, run up, run back up to 58, 59, could be the go. But if we start to hold here and we continue to pressure lower and you want to buy, just wait. All right, Ethereum's much the same. That's miles away from resistance. If you take it from here, it's probably still, I'll probably want to be taken from there. I still think it's trying to find something that makes sense. That doesn't look too bad. Either way, I think it's still on a downtrend. You need to start attacking some of these highs on Ethereum too if you're thinking about buying. This zone over here, if you start attacking up to here, this downtrend's potentially broken, and it's a longer term downtrend that could start to come under fire as well, especially after that move down, go through, try again, reject it, and we had a deeper correction. Okay, all right, let's get into some of the shares now. There's your sell-off that I wanted. I was shorting this in here, a couple of really two scratch traders where I was trying to sell into, thinking Zip was going to roll over later, and I gave up because I was doing the stream. So I think probably good that I gave up because it went a bit higher, but also bad because it did eventually sell off. So let's look at APT. It bounced back pretty strong today. That's had a bit of heat coming out of that last trade. Let's just look at the daily. If I can get that up, here we go. Looking at the daily, it makes sense why it's rallying today, and the market's up. Afterpay is going to pop. It's just bound to, because it's had that good sell off that 160 mark. Lower high come in, bang, got down here. It's still holding the uptrend. I'd assume it's still holding that uptrend. Let me just draw that up. So the way I attack these is what I don't like is that kind of action. Whoops. And I don't like that it is stretched. We've been stretched before, we've been stretched, and we're a bit different. This time we're stretched, the momentum's actually gone up, so sooner or later momentum runs out of steam. Okay, and then you have to go in a bit of a pullback mode. So we don't know whether this is going to get bought up and hold, it's going to have a bit of a pullback. So this is pretty much where I'd be looking at. If we hold in here, yeah, it's stretched into that zone, a couple of heavy days down, bouncing off that 120 area. If I wanted to buy it, I'd be looking for that daily high or low. Because I don't want to be just buying it purely off that level, because there's no reason why it can't turn and go straight down and really, start to clean up a lot of this juice that's been building up for the last few years. Or at least the last year or so. So we know there's a stack of buyers loaded into Afterpay. Everyone has been long, except for me. I've been long early. I was smart enough to get in nice and early, but dumb enough to not to stay in. So it happens. Every day I look at this, I want it to collapse. So if you're looking at longs, this is the way I'll be buying off support, because there's nothing to say it doesn't do this and you just go bang straight down and then you're caught. You're buying to support. That's why, everyone I sort of talk to, or conversations about trading and how to trade and what to look for, it's confirmation. Now, if the market's coming down like that and you've got your buy just above a level, go, it's a good place to buy. It's worked in the past. It could work, but I don't think that kind of strategy is a high setup, high probability setup. Now, again, you could go off a 30-minute. There's no reason why you can't drop down. This is a daily chart, to trade off a 30-minute chart and look for your high low like that, because it could be just a bounce like that on the daily, and then you sort of miss the boat if you're waiting for this high low. But you can drop it down to a 30-minute chart and you start to see that bottoming action on a 30 could be a V shape on the daily. But you can still drill in and buy into that shorter term strength, anticipating that we're getting a good bounce on the daily chart. Okay, so that's why I really do hate buying there with your stop below, because there's not, coming from a futures background, indices, all that sort of stuff, there's no reason why the market can't blow through, get you in and out, and then bounce straight back up, hold, and then off she goes. It does it time and time again. It does it every day, and then every day of the week in the market. So yeah, just be wary. It's something like this potentially. You've got that, you've got a high low, squeeze, buy on the break. Stick with the strength. Buy when it's you're proven, you've got confirmation on the upside. So yeah, to me, APT, good zone where it can continue on what it's done in the past many times and get supported. Don't like the fact that it's come hammering down into there, because it's just showing that sooner or later people are going to start to think twice about buying, and sellers, anyone that is holding, is going to start to think about maybe it should be wise and smart to start taking some gains off the table. So for me, if I was going to buy this, I wouldn't be buying it for a long term. I'd be more intraday trading it around the basis that, we could be getting a bit of a bounce in the daily, so sort of biased up. Just depending, if the US drops 600 tonight, don't expect us to be positive tomorrow on the ASX. And then, we could get something like a bit of a sell-off on APT. It'd be interesting to see how that plays out. Strength today when the index is up 100 points, there's probably going to be buyers. People love Afterpay. It's the next big thing, and it has been for a while. I don't know whether it is or isn't. I don't know much about the fundamentals, but the chart's certainly heading higher at the moment, and it is a prime area where you could nibble in, just know exactly where your risk is. SZL. Now, I was looking at that. I kind of like this one. I think, just go. We don't need to do anything there. It's the best fit. Yep. Daily. All right. Let me just get the chart up on that. And in the meantime, have some coffee. All right. There's a few clear things you probably see. First is that we've reacted off that level. Okay, that's a concern, obviously. That was all part of one trend up. It's doing well. Got hammered down here. It was September last year. Yep. So no, it wasn't sell off. It was just. I think this has been a bit of a pump by some Twitter people. Bit of a pump. They probably sold into it. It got smacked down. It just took out that low, but that wasn't so bad. You can see the way it's pushed down and rejected the next couple of days, and this is what I'm talking about. If you buy here into the low, going, this is great, and you've got your stop below it. If you don't trade stops, that's fine, but you're going to get caught out eventually. And generally, if you don't trade stops, especially in stocks, you could be good for a while and get absolutely hammered other times. That's why I'm a firm believer in stops. It's just how to trade it, how to trade around them. And so that's pretty much that play that I was saying. If you buy into the level, just waiting for that weakness to come in, you're essentially saying you're smarter than the market. I know it's going to turn up there. I know I'm going to buy into that support with my stop below. And then this time around, you've got stopped out. You've seen it go. This is a prime reason why I wouldn't. This is what I'll be looking for. Yeah, it didn't go too far after that, but still, you're buying on the rise here. You've got an opportunity to at least take a small gain or a break-even trade when it pulls back. But yeah, you're ideally you're trading the share. You're not guessing what it's doing. You're trading it. You're trading what you see. You're putting it in front of you, and you're trading it. So that's why I'm a big advocate of not sitting on the bid. Put a bid in near support level, because who's to say it's supportive? It's only touched it once. That's not support until it's confirmed. Okay, so you're going to go near this low. You're just saying, no, I'm guessing that it's going to hold up there. Now there really is no room for guessing in share markets, or any market for that fact. There's probably a bit of support through there. Either way, what it's done, flushed out some people, got some more back in, got a lower high, come back into support. So the second time once it's held a few times, a certain area, there's some strength coming back into it. And you can see that. And that was a prime. You could probably trade it through there. If everyone can see what I'm looking at. Contracts it back into the level. Prime area, it consolidates sideways, starts to lift. So you know that you're seeing that. You're off where it's traded 1, 2, 3 times and failed to go lower. Finding some buyers off the level. Start to break out of that downtrend. So this is the downtrend. It's broken that. It's holding. So obviously you want to buy as close to that level as possible. But when the market's rising, buy and stop above, risk below. You've boxed it up. You know where your risk levels are. You know what you're going to lose if you get it wrong, if you get stopped in and it turns around and stops it straight back out again. That's just the nature of the beast. But the probability is that you're reading the price action right and it's in your favor. You're buying on the rise. It is rising. You've got a higher low. It's confirmation that buyers are stepping up at higher levels. In you go, and it rallied. Okay. The problem is it's also reacted. It's done the reverse. It's sort of reacted off that level. Okay, up around $12. So if you're long, look, there is concern. The thing is, to me, on a daily basis, this is your anchor all the way down here. So if I bought on the break there, I would have taken a partial up at around 12, but I still got, technically, I probably should have my stop below here. Because like we say, this is a Dow theory, higher highs, higher lows. There's times when it rallies, it pulls back, that's your anchor to the uptrend, but then people get fluffed out by this lower high. The lower high doesn't necessarily mean that it's all over. It might just be that it's gone too hard in that leg up, and it needs to have a bit of a deeper correction to flush more people out, which potentially is what Sezzle's doing. So that's why I'm looking at this 1-2 moves, because generally when it's around the level and it's going to be a serious level where you would expect it to break, it tends to power up and it starts to chop around there for a while. It does more action than that, and then gradually you start to see lower highs come into play. The move goes down a bit and then it pops up, then it goes down a bit lower, it goes down a bit harder until that momentum starts to shift, and then you really get those bigger sell-offs. Okay, that's what it tends to roll more, not just up, bang, bang. That's your technical term, bang, bang, by the way. You don't necessarily get this kind of action. Can we all see that? Is it really, really small? You don't necessarily get this kind of action off a level. Okay, so that to me is not so bad at all. It's just that you might have to wear a bit of heat. Your anchor's below here. If you bought in around 9, you've probably been put into a negative position Friday, and it's actually turned out all right. You're up today, but your risk is below. So until it breaks that anchor, I would be looking at it going, well, the trend is still up. There is the fact that it's worked its way lower off 12. You've got to have it in the back of your mind for a risk perspective that could be your double top. It's just the action off that level. Look, it could be. It may not be. I'm sort of just want some time to see it first. At Sezzle, Linus. That's one I've had my eye on for. Oh no, it's not. LCK is what I've been looking at. LIC. What am I doing here? So Linus, for me, you look at the weekly bar charts, the bars, it's gone up pretty hard. And that's after, doing nothing for a couple of years, 18, 19, sold off on the sell-off and then boom, straight up and just took it out, $3. Obviously, there's been some good news and everything. Rare earths, isn't it, that's driving it, the demand, all that sort of stuff. And that's probably, it'll be interesting to see if it can continue going. But it's from your dailies, it's looking good. It's done 42 million today, so it's really kicking on. You know, if you're looking for a new buy, I'll be looking for exactly what happened prior, and it's happened before. So let me just show you what I mean. Let me just go. Let me go. Here we go. All right, so you've got that chart there. The entries I'll be looking at. See how you've got this pullback, high, low here. That's a prime entry. So anyone that doesn't know, we call that an ICT, inside continuation. So when you get something like that, it's essentially this kind of pattern. A move up, then what happens? You get this move down, flush out a few, pops up. There's people that are looking for, you know, when you start moving back down again, people looking at going lower high, but then all of a sudden, some strength starts to come in prior to the recent low, and you get this kind of move. Okay, then it starts to head up. So as soon as it breaks that inside level, you're coming off a, you know, assuming that it does, it could just go down like that, but generally we call it ICT. If it starts to break out, that's your entry just above that lower high, where your risk is just below the most recent high or low, if that makes sense. So I'll clear that up. So this is our price action. I'll just do it in another color. So if it goes down, holds a higher level. Oh, don't know why that won't. Holds a little level there, starts to lift up. Your entry's a break of that, and your risk is just below. Now that happened here. Did the same thing in here. You've got pullback, push up. Maybe that was sideways, but you could have traded the break there on that green candle. Yeah, a bit of heat, but still the same sort of thing happened, and it lifted again. So you've had a couple of good entries there. Now I would want to see that. I want to see a bit of a lower high come in here. I want to see it bounce off the MAs a bit more and hold that trend. Okay, but come back into the MAs. I just want to see some people cleaned up, and that's purely because, you know, I don't want to get caught when the market's extended and you're buying this breakout, because sometimes those breakouts turn into a massive sell-off, and you buy that break in intraday, you get triggered into it, and that same day it finishes back below. It's happened to me many times before, and then you get stopped out. So that's what I'll be looking at on Linus at the moment. I think it's yeah, I mean, either way, that trend is up. It's just that entry. You know, if you're not in, how do you enter? I'll be looking for something like an inside continuation. We just said, you know, just a bit of consolidation. The more time that goes by and it doesn't break down, the more it's going to get some perks, some interest of some buyers, and then that move up might be pretty good. You don't really want to buy, you know, like this on that green candle. You got stopped in there, potentially flushed out, or you're behind the 8 ball at the moment, and we don't know whether it's going to be a bigger sell-off or not just yet. But either way, I mean, like I said, that trend is up. Does that make sense what I was just saying there, Nisha? Hopefully it does. Last one I just look at, LCK. It's something I've been watching for a while. It's just fundamentally, if I've got it right, I think they've got a massive resource. It's just trying to build and there's a lot of money and debt that comes into starting to do something with that resource, and I think they're starting to put that in place. So it's probably a longer term thing. But these sorts of things tend to grind and grind and grind, and bang, they'll go up in a few days. So you're just going to be careful and just keep watching it. But either way, looking at that weekly, you can see massive support through 10 cents. It did get through 10 cents before we've had this latest rise. Some good volume started to come in as well. It is grinding down, but it's starting to hold. Hopefully it's starting to hold an inside level just above, you know, say 13 cents or so. So just keep an eye on that one, 13.5 cents. So ideally what I'd be looking for is just that downtrend, line across the highs. Just do that. Line across the highs. And I think I sent out alerts for this. Is just keep an eye on that. We could chop around, we could pop up here, and if you buy the break inside here before it's actually broken out, that's not really a key level. It's just a bit of a pop up, and then it could head down again and take out 13. So what we're looking for, a bit of a run to 17 or so, 17.5, and then what happens on the first pullback, because that to me is broken out of that contraction down. We've got a solid base in at 13.5, and we're starting to the process of rallying. Okay. All right, I get RCP for you just before we go. Does that make sense? So that's why it's, you know, it's easier said than done. Getting, you know, refining your entries. There's times when I've been left on the sidelines that things just go up, but I'm not going to change my trading style for anyone. It works for me. It's given us good results. There's times when I'm out of the market for a bit of a while, but that happens. RCP looks pretty good. Red Bank Copper. It's a smallie, isn't it? It's got some volume coming in. I mean, I wouldn't, for me personally, I wouldn't buy it up here because it's extended, obviously. So it's just how long can it hold? If it starts to grind lower, and there's no reason why it can't extend a lot further. Look at that weekly. I mean, it's been, I don't know if it was the same company back in 2010, done nothing for a long time. So it could be that it's going to start to rise, but odds are that might keep some buyers out. Copper's on an all-time high. That is a good thing, but it's also a bad thing. Like we always say, how many people can keep buying copper up before it has to have a bit of a correction? That has a bit of a correction. Potentially this could come off because it is extended at the moment. I'll be looking for potentially a retest around that 10, even just above that. If it starts to hold up, starts to get volume flowing back into it again, and all my indicators as such are heading towards that oversold territory, but it's at a higher level. Yeah, I think it could be a good little buy. For now, I can't enter that long. It just doesn't, my risk has to be all the way down at 7 cents, so, and that's a 50% drop in price. I'm not risking that at all. So yeah, for now, it's definitely on the rise. It's looking pretty good, especially this action through here. All of 2020 into 2021, sideways, then boom, up she goes. So it could be news driven that might drive to that next leg up. We'll see how we go. All right, guys, I better call it a day there. It's been the hour. Thanks very much for joining me. Like I said, any questions, if you listen to this later on, any questions, just feel free to send us an email to support@tradesetup.com.au, and then I'll get back to you. Anything else, if there's something, a specific topic that you want to talk about, just send us an email, and then I'll find some information about it. But generally, I've got an opinion anyway. So if it's technical, then fine, that's easy enough. With the bond, it's worth doing a bit of reading and research about that, because I think they could really, it's just understanding how they work. What I said before is my understanding of it. It doesn't necessarily mean it's exactly right or anything. I could be missing the point on a few things, but I do see that there is a battle at the moment between the Fed and bond traders. Bond traders giving a bit of a nudge, sort of saying, hey, you just can't keep lobbing cash at the market and expecting not to have an inflation problem. So they're factoring that in, because generally, in the past, you're buying bonds because the US dollar, everything's going up. It's better having money into the market. We don't mind lower rates, but the fact that the rates are as low as they can go, which inversely means bonds are as high as they can go, you would think. Why would bond traders keep buying them up here? So that's why they're trying to force the hand, saying, well, you want us to support any, you're selling bonds, trying to raise cash, you have to give us a much better yield. And if they're not going to give a much better yield, then no one's going to buy them. It's simple. That's the physical bond. So yeah, it's going to be interesting to see how that plays out. I'm sort of leaning to the ways, higher yields, at least pressuring the markets a bit more. But we'll see. Where it still is, don't fight the Fed, who knows. Anyway, guys, enjoy your day, and we'll speak to you again next week. It'd be great if you can leave us a like, and join us next week. Cheers, guys. Bye.